Good.
Welcome back to another episode of the Multifamily Investing Academy's podcast, hosted by yours truly, Charles Dobbins, the multifamily attorney, and Jason. State your case. Jason's my guest today. Jason Yarusi. So, as I tell my kids, with a name like that, he's obviously an ethnic. And my kids blow up whenever, Dad, you can't say that. You can't say that. Why can't I? Well, the guy's an ethnic. I mean, what does that mean? What does it mean? They have no idea what it means. So welcome, Jason. And now tell me about yourself. What's going on, man?
Sure. Yeah. I jump in the show and I hear an attorney tell me state my case. I say,
Yes, exactly.
where are we
this
today?
morning? I have heard your testimony, Jason. You claim to be a multifamily expert. Please remain seated. Go ahead.
Sure. No, I appreciate that. And so in New Jersey, come from a heavy construction background, which we have a pretty interesting niche where my father decided about 40 years ago we should start moving and raising buildings. So we've done that for a long time, and that's been our core focus. It's crazy after Hurricane Sandy hit here. A lot of homeowners needed help, basically lifting their homes to meet FEMA requirements and hopefully not flood ever again. Lots of work, lots of hard work, lots of great work, but that led us down the path of just saying we have to find something that can be a complementary business that could create more passivity to our life. And at one point we could have worked 7 days, 24 hours a day, just nonstop.
I know.
Looked at, of course, you jump into different arenas in real estate, and it's such a great field. But there was just spaces that you would jump into that you would just find are just another active role. If you want to flip homes, you want to do Airbnb, you want to do something of that magnitude to the point where it's still another job for you to really create.
Right. Yep.
So we jumped in, we learned, and used, and progressed as we progressed. And we had a couple small rentals out of state, and just looking at the scalability of that, it just dawned on us. Well, if we really want to do something that can really be beneficial to not only us but others, we have to look on a bigger scale, and that's where large multifamily really came in on board. And I brought it up to my wife, and she's always at that point looking at me like, all right, let's see what that means. And here I go onto some tangent, but dove in, found how other people were doing it right, found how other people were doing it successfully.
I just had a flashback of like when I told my wife the same thing. It kind of went through it was exactly like that. She's like, all right, let's give it a try. Sure. Yeah, it was exactly the same thing.
Right. Yeah, so we were owning 3 and 4 units, and I said, what if we just sold these and borrow 100 units? She was like, okay, honey. So that was it. We really just started taking on a line of just, okay, what does that look like, and what does it take to make that happen? And it led us from going from a 3 unit to up to a 94 unit was our first purchase, out in Kentucky, and we've just grown from there. We've brought 4 assets.
Where in Kentucky is it?
Louisville. Yeah, Louisville, Kentucky. Yeah,
I used to own a property in Lexington, Kentucky. I like Kentucky.
Yeah, I love Lexington. My sister actually ends up being in Louisville, and that was one of the indicators that really just was, I would say, a comfort zone, because she's not looking at it from a real estate perspective. But when you have people that are in a market, they can give you some idea about path to progress. Where people want to live, where is there a lot of factory work, where people want to stay away from, where are some of the heavy hit areas, and where is something that really maybe I should be looking into because things are starting to build up, and that gives you a good precursor. But you can find that in so many different ways. But it's just when you have a family member there, it's always a nice touch.
Yeah, and Kentucky is a nice state. It's they speak English in Kentucky. I don't know if you knew that, but there are no banks of America in Kentucky. So it must not be in America,
Yeah. I would say we use Bank of America here in New Jersey, and I know that too. And one thing about Kentucky, one time we were there, and I beeped the horn for some reason or not, and my sister grabbed my arm. They don't do that here.
Yeah, but here's the problem: is whatever you do, if you stay in Lexington, Kentucky, do not get a hotel room down in downtown Lexington, Kentucky, because it's the siren capital of the world. It's like 4 o'clock in the morning. Sirens are going off every single time I stayed there. I hated it.
Oh, wow.
Yeah, so don't do that. Go out in the outskirts. Yeah.
Good. Those are the key points that you can only get from people that are in the know.
Exactly. You don't get this from anywhere else.
That's right.
Multifamily Investing Academy. That is key. That is key.
I love it.
And now let's talk about something else too that you're not going to pick up on, but maybe you have already. When you fly into Louisville, you are going to fly directly into Louisville. Do you have to get a connection? You can get a direct there, just at odd times. Sometimes you have to take the connection to get there if you need to be there in the morning. And do you go through Cincinnati?
No, the connection is, weirdly enough, you filter through all different places. Sometimes Charlotte. So it's all over the place.
Okay.
Where the connection will go through.
Because what I found out when I was buying properties in Cincinnati is that the Cincinnati airport, and this was the case back then, the Cincinnati airport was the most expensive airport to fly into because Delta owned 95% of the gates. It was more expensive for me to fly into Cincinnati and get off the plane than it was for me to fly to Lexington with a connection to Cincinnati. Craziest thing in the world. And these are the things you don't pick up on when you're thinking like, oh, I'm going to go buy property in this marketplace. I'm going to buy, like, yeah, do you know what it costs to get in there every single time? Yeah. Those are the things that I teach. You know,
those are the learning lessons right there. That's where you see the institutional players not going to a market. You can't get a direct flight, and that's where you can find your properties.
And another one is buying a property outside your marketplace, but within the same time zone. You know, because that makes a huge difference when, you know, like if you're out on the West Coast, you buy a property in Carolina, that 3-hour time difference, that's tough to manage a lot of times.
That's exactly right. My wife's from Hawaii, so we'll visit her family, and I couldn't imagine living there, but because if you're on a regular time frame over there, you know, the day's over by the time on the East Coast.
Yeah,
it's just
exactly. Yeah, 5-hour time zone. I think 5 at least. And yeah, it's crazy. It's crazy. So, all right. You got a property and you went out and you did it. You went out and you did it. Okay.
Correct.
Listen, just so you understand the rules of this podcast, we say anything we want. We talk about anybody we want. Nothing ever hits the editing room floor. All right. So
that's great.
Just expect it. So let me ask you this. Mm-hmm. Where'd you get your training?
So honestly, there's so many different avenues you get out there, right? And there's so many people different that you can talk to. And we just had the luck that we just started looking at who was doing it successfully, right? And there was people like Gino Barbaro and Joe Fairless that were out there just doing great things. And we started working with them, just learning how their philosophies were and learning how they were doing it. And you take from both, you know. Joe strictly syndication, using third-party management. Jake and Gino are really always doing management in-house. And you find what works for us. Yeah. And so for us, you know, we did want to use third-party management. We liked a lot of the different drivers that Jake and Gino were implementing on their properties, and that's one of my favorite parts of this. We're up to about 450 units where we're at there, somewhere around that mark there. And I really like the asset management side. It's something great. You know, the money raising side, it's a great thing to be able to help people achieve what they want to achieve, you know, through passive income, through coming here. But I do really like getting into the property and seeing how we can really make the most out of the property on the income and expense side.
Cool. Now, when you bought this property in Kentucky, what was the strategy? What was your end game? What was the purpose of you buying it?
You know, we were, and still today, we're aggressively patient, right? And so we're out there digging, but we're taking a while. So this property was owned by we'll say kids. They were in their 50s, but the father had passed away. He was 90-something. And he had left it to kids. The kids were out of state. They're like, we got this 94-unit building. And he left it.
I love it when you call people in their 50s kids.
Yeah. No, that's how it was prefaced. You know, the kids own it now. I was like, well, how are the kids? Like in their 50s and 60s. Yeah. Okay, well, I'll call them kids.
Yeah, those are like kids. They just bought Medicare supplements.
Yeah, exactly. So, but they had the property, and I think the dad had left them like 500 single family homes. It was something obnoxious, and they were going, well, this big property is 94 units. Seems like such a problem. It's so big, so we'll just keep the single family homes. We want to get rid of this.
Oh my gosh!
Completely backwards, right? But this went on, and they had I believe they had someone come in there and you know, offer up, I think with the purpose of thinking they were going to reach so offered them $3 million something, you know, for the property, and they got all excited, and the guy came in and retraded huge. So that went off the table. We had offered, you know, based on what they had, and the property was dysfunctional based on so many different things.
How'd you find the property? How'd you find it?
Property management. We actually had made great connections with property managers out there, still who we use today. We love them. And, you know, it's always a nice thing for property management. It's the most unforgiving business, right? You do good, people sell. You do bad, you get fired. So on that point, if there's investors who are either undercapitalized or just it's their time to sell, it's a great point to have those connections with property managers, because you can say, hey guys, you know, if this comes up, if you have an investor who just maybe is not capitalized correctly, or they're just at the end of their hold, you know, we definitely take a look at it and we keep you on board. And it just works for them because they can continue to have those assets within their repertoire. So that's how we found it. And we actually went in and offered $1 million less than they were asking, you know, or even less, or 1.1 million under asking. And they came back with this great counter at asking. And so we said, oh, thanks, guys. So we said, well, that's not quite going to work. So we just...
That's like that Geico commercial. That's not how this works. That's not how any of this works.
Exactly.
Yeah,
So we
but
actually
okay,
said for that.
hold on a second. You guys came in. Let me ask you this: as I teach all my students, you make the offer that works for you.
Mhm.
So you weren't. My guess is you weren't really trying to get in there and lowball them. It's just the numbers justified that price.
They did.
That's it.
And the biggest thing to make here is that if I just threw that number at you, you could be insulted, but we always give the story to the broker because we're only as good as their story. And just said, hey, Mr. and Mrs. Broker, like, hey, man, we'd love to offer on this property and give you an offer, but honestly, it just works at these numbers. And so, I'm happy to give you the offer. We'll write up an LOI if you want us to. And if you feel it's just not the right time, then, no hard feelings. And half the time, yep, write it up. The other half of the time, they're expecting it somewhere else. Okay. So we put the offer in, they wanted 3.2 million. We wrote it at 2.1. They countered at 3.2. So we said, thank you, but no thank you. And, good luck with it. And, but 6 months went by, they had taken it down and were just kind of out there. And, we said, we just track our deals. And we said, well, let's just put another offer in. So we actually raised our offer only $50,000. It was 2.1 million, $50,000. And all of a sudden their $3.2 million ask came down to 2.6 million, 600,000 on the table, just poof. So we said, oh, okay. So went back and, at this point they were just saying, well, we don't want this property. We just want to sell it. It's just more trouble than it's not. So through back and forth, we went back and we ended up getting it at $2.3 million, all said and done.
Wait a minute. Are you trying to tell me that 3.2 original offer price was a lie? Are you kidding me? Are you trying to confirm what I tell everybody?
It has happened.
The biggest lie in multifamily is the asking price. Don't go by. And you tell me the story about the kids that inherited. It kind of reminds me of this one. We're looking at a property one time, and the asking price was $8 million. We ran the numbers, and the numbers were $4 million. So I called a broker. I said, "Hey, what the heck? I mean, why are you asking 8?" And he goes, I said, "It's only worth 4." And he goes, "Yeah, I know." I said, "So how are you justifying $8 million?" He goes, "There are 4 children in the deal." And right away, I knew exactly what he was talking about.
Yep.
When the father died, he told all the kids, "This property's worth $4 million. You'll each get $1 million for this property." And he didn't tell them there was $4 million of debt on the property. So so they thought, oh, we're all going to get $1 million, add it up, $8 million after we pay off the debt. That's what Grandpa said. So that's what it's going to be. And no, it didn't work that way. So
you're so right.
That's a beautiful thing about multifamily. There's no emotion involved. It's just a formula. That's how we figure out the numbers. It's just a formula. So
yeah, and that's the great part, right? You're basically buying a business and finding where you can perform. So it is no hard feelings. And traditionally, most of the times, it's not like you're going to buy a house and someone's just offended because they think their pink cabinets are awesome and you should pay for them. You're buying something and it's either performing or it's not performing or it's underperforming, whatever way it is. Well, you can validate it. So now you dig in, and this property, it's been a home run. And the reason was, okay, the rents were definitely under market. They just figured, okay, it's better to keep the property full than go on this point. But you walk across the street to the same type of property, literally same year built, same builder, you're paying $100 more just living across the street than our property. Yep. They had 6 units that were rent ready, and we walked in for our inspection, and Doris, who was the office leasing lady, she was watching Dog the Bounty Hunter and just wanted nothing to do with us because she was completely annoyed we were even there. So she wasn't taking calls.
How long was it Doris?
I think it was Doris was her name.
How long was her tenure with the Jason Yarusi group?
Until we finished signing on the documents, and that was about as far as it got right there.
She was gone.
6 units. It was 6 units that actually ran out, and she just didn't want to be bothered. And they were having a ton of issues on collections. And was even more funny, we found out she couldn't take rent checks. They actually had to go take their rent 4 miles away to drop it off or put it in the mail. So they're having a ton of problems on collections because she wasn't allowed to take rent. So we were looking at this like, man, here we go. They had 3 maintenance people servicing the property, and they were overinflating the maintenance costs because they were putting it all through that property when, in fact, you could really do it with 1, sometimes 1.25. And they were actually doing their single-family homes with putting all of that payroll into the multifamily property. Wow. There were so many things that they weren't taking in. They had 2 laundry rooms, and 1 was down. There's 600 units in the area, no actual laundry room right there. So for anybody else, so we're actually bringing this other laundry room on board now. Allowed to other tenants in the area there. It's been just a huge income driver. Got a laundry contract from it. Then
let me just say that one of the biggest complaints people have right now is the market's so hot. You can't find deals, and what have you. But I always say deals are out there to be had if people know you're in this business. If no one knows you're in this business, forget about it. You'll never find these deals. But the thing is, people die, people get divorced, partnerships break up, and opportunities pop up. I mean, obviously, my guess, and correct me if I'm wrong, and I don't think I am, but this deal never saw the light of a broker, did it?
Well, they had a broker relationship on their side. And so, yes, they had a broker, but it was more, he was just trying to, I guess, corral kids. So I don't know if his part was market or private, but he was in there, which was fine, but again, they had to pay it, and I think that was some of the part of them trying to get a point, and he knew what it was worth. And it was that same story you just basically told right there. You're trying to appease 4 or 5 different parties here that are all just assuming they're going to get some, massive payday. But, if it's just not there, it's just not there. And that's what it is, until they can all come to a meeting of the minds. And we actually, the way we got to the finish line, we actually sent our underwriting over to them was the last step. We just said, like, hey guys, we are not trying to beat you up. We have investors to answer to. And for this, we have to meet a certain return metric. This is just where the numbers work. That's where it was. And that actually got us across the finish line.
And that, because this is a sales and marketing business. And the first sale you have to make is getting the owner to accept your offer. And if that's what it takes, then that's what you do. You got to get that offer accepted. Now you're off to the races. And my guess, because your numbers are very, very similar to a deal one of my students just wrapped up, about a 100-unit property. He had $100 of new rent money coming in. And so based upon the cap rate that was going in that marketplace, was probably similar to your cap rate. Just because of the increase of $100 times he had 99 units, that's going to increase his net worth when he's done rehabbing them all and moving people in, increase his net worth by $1.8 million because of the power of the cap rate. And
we actually refi out 13 months later because we have a 1-year blackout period. And for that point, we were able to pull out 80% of all, or it was a 75%, not including the cash flow that had already gone out to investors, of money back to investors, which was
excellent.
And, we had home runs. We changed out all the toilets, faucets, aerators, cut our water bill down by 30%. That 30% based on it was, 7.5 is what we got it at, and 7.5 is what we refied at for the cap. And that brought us, if you look at just the cut in the water bill, it actually brought the property value up $300,000.
Isn't that great?
It's great. And that's what I say to people. It's not always, that you walk in there day one, the tenants are worried that their rent's going to get jacked up, understandably, right? Yeah. But if you go in there and you improve the property in so many different ways, and you just don't go there just looking for the rent. I mean, there's so many different ways you make the property better that doesn't even have to do with rent. And then, okay, the rent will come. Like, hey guys, we've made this property so much better. We've taken care of all your maintenance calls. We've cleaned up the landscaping. We've put in playground. We've done all these things. So of course, we're gonna have to start asking for some nominal rent increases now. Yeah, and that's just part of the game. Yeah,
that's fantastic. Bravo. And just think about it. You reduced the water bill, and your net worth went up by $300,000. What would you have to do, owning all of those 500 single-family homes that the guy owned, to get that type of an increase in value? You just couldn't do it. You can't do it. It doesn't work that way.
You'd be going insane. That's actually what you're trying to do.
That's why multifamily is so powerful, so incredibly powerful. Now let me ask you this: how'd you do the money? How'd you raise the money? How much money do you need to raise, and how'd you do it?
It was around six. It wasn't a huge rate. Around 700,000, I think, is where we came in there for. We were out there talking to investors before doing it, and it's one of the things we're always telling people, like, you don't want the stress of actually like acting like needing the money, because this is a great way that you can help people. So if you go out there and talk to people and tell them why you're doing it, because you always have these hurdles, right? If I go out there from heavy construction and tell people I'm investing in apartment buildings, they're like, whoa, why are you doing that? And then you start telling them all these great things about it. And then you start talking about the space itself, because people don't even know that this is available to them. Okay, so now they can start understanding why this is available and why this could be a great resource for them. And then lastly, it's the deal. But if you try and do that all in one sitting, it's just too much. People will blank out because it's just too much for them to take in. So we go and we talk to them about what we were doing, why we were doing, what we were looking for, and just gauge your interest. And if they were interested, we'd see what kind of money they potentially like to put into a future deal. And here's the returns I'm trying to meet. So great, we've done that. I have all my investors set up. So we raised the money. It was very quickly because we already had these talks months before. So we just said, hey guys, we talked about those deals we were looking for. We found a deal. It's awesome. We'd love to bring it over and talk about it. Are you in still? Yeah, great. We're in. Commitments. And just,
I got to tell you, Jason, everything you just said is what I had a special guest on my Monday night call for all my clients. And he talked about raising the private money. Everything you just said was exactly what he teaches. It's doing everything beforehand, lining up the money ahead of time, setting up the communications with your investors ahead of time. So when the time comes to pull the trigger, they already know who you are. They know, like, and trust you, and they're ready to rock and roll. That's exactly the way to do it. Bravo, Jason. And the fact,
I appreciate it.
and just for the record, I just want to state this because, because I'm open book here. Jason is not one of my students, and he still figured out how to do it. Maybe it took him a little bit longer. He doesn't look like a very bright guy. So, but come on.
Not at all. That's I get that too. So my wife says, I don't know how you do it. You don't look like a very bright guy. So okay.
I bet
I know that story.
Your mother says the same thing that my mother used to say about my father. He's cute, but dumb. Yeah.
I love it.
I love it. Yeah. All right. So let me ask you this. You get the Multifamily Foundation. Now you're kind of coming on this side. You're coming on the dark side here. So tell me about your business.
Sure. So you know what it is. We started a meetup 2 years ago, and the meetup's been huge in New Jersey. It's a New Jersey Multifamily Investment Code. So actually, we changed over to New Jersey Multifamily Foundation, and we got about 2,000 members. We get a great turnout. 100 people plus at these events. Just talking about multifamily because there was just. We found here that you have so many different meetups that were just kind of all over the place. Like one week it's flipping, one week it's notes, one week who knows. Well, our focus is multifamily. So let's see, what the interest was. And it was great because we've gotten a community of like-minded people out there, whether they've not done a deal or they have 1,000 units, all together just talking about the resources and the availability of why you should be in multifamily. And that's grown to where we've just been now helping people doing the same process, mentoring people that really just want to say, well, how do you do it? Because it's not that everyone can do it, but it's that point where people think that they just need to see behind the curtain. Like maybe someone will come invest in one of your deals and all of a sudden they say, oh, I get it now. And they can go out there and do their own deal because they see that, there's no magic curtain that's being pulled across. It's just there's steps in place. And when you can help people just say there's a sequence you can take here to do this, from just learning and understanding the terms to building out your team, to finding your market, to learning how to underwrite, to sourcing deals, to going out there now how to raise capital, to finding deals, closing on deals, and taking over. And if you can put that in a process and take the steps, it takes out the fear in actually doing it, because now you have a logical step you can take from there. So yeah, we started Multifamily Foundation to help students really just that want to take that next step and just learn the process and just have the availability just to understand that this can happen for anyone who wants to be specific and ultimately has the big why and wants to commit to it. That's been really helpful for us to be able to, it's been honestly awesome to see people commit and take action and really make it happen.
Excellent. Okay. So what's next for you?
So, we don't do unit goals because that's always, it's kind of like, well, I want to buy 1,000 units. I could go buy 1,000 horrible units. Hey, there I go.
Wait a minute. Don't you stop right there, Jason. Don't you know what my shtick is? It's how to own 1,000 apartments in 5 years. And I'll tell you, it's funny you say that about not having a unit goal. And I said, the reason why I have that as like the name of my Saturday class is because when I'd go around the country and ask, start off a meeting, I'd ask people, okay, so where do you want to be in 5 years? What's your goal in 5 years? And one guy, I want to have $10,000 of passive income. I want to, quit my job. And there was always somebody that said, I want to own 1,000 apartments in 5 years. And I just looked at him, I was like, okay, how'd you come up with that number and why? He goes, it sounds good. And then it's like, well, how do you do it? He goes, I don't know, but that's why I'm here and learn from you. So that is the name of my mantra, how to own 1,000 apartments in 5 years.
I love it.
But the thing is, it really is. I got students all over the map. I got students with 6,000 units. I got students with who haven't even written an offer yet. But what'll happen is if you start going through the process, you'll get to a point where you seek the sanity level. And maybe only 1,000 apartments isn't your thing, but having a nice income and 150 units, hey, that's good for me, and that's fine, and I'll retire very happy. So yeah, it really is. And that's the beautiful thing about this business. It's I heard you say at the beginning, you talk about third-party management, but I guess Jake and Gino, as you say, talk about doing it on a where they retain that themselves. Whereas I teach that you should own your own property management company. So everybody's all over the place as to what works best for them. So
correct.
just keep gathering as much information as you can. So, yeah. So what do you think is, let me ask you the question then, Jason, where do you want to be in 5 years? And let me tell you something, you better not say New Jersey.
Well, as I said, my wife is Hawaiian, and so I call this the Hawaii of the East Coast. And so she so we don't let her outside much during the winter. We keep the big bright lights on and everything else.
You must keep her locked up.
That 3 little kids and 2 bulldogs. So ultimate goal, right, is that the glory about this business is just like you said, you can do this from anywhere. So our ultimate goal is to spend, because we do have 3 young kids, and my family's here, but her whole family is in Hawaii, and so our goal is to spend 2 months a year in Hawaii. And awesome. So we're still trying to break that up. We're at a point just because we go twice a year, but you get a couple weeks here, a couple weeks there, just because they grow so fast, right? And I got a 4.5, a 2.5, and almost a 1-year-old, and it's just like yesterday that happened. So again, we're going to continue to build our business so we can continue to help as many people as possible. And closing a deal a quarter is what we aim at, but we're going to be aggressively patient. If I close no deals in a year because I can't find the right thing, fine. But I know if I keep taking the steps, and that means having so many talks with so many brokers, with so many investors, with so many property management companies, and if I underwrite so many deals per week, I'm going to have more opportunity than if I'm not doing any of that.
Yeah, I'll tell you something. I love what you call it, how you call it, aggressively patient, because you have to be that in this business. You have to go after it aggressively, but you have to walk away from a whole lot of crap. And just, no, that's not going to fit my investment strategy. I won't take it. Because if you buy a property the wrong way, it will set you back years.
It'll haunt you.
Yeah, it'll haunt you. Exactly. Yeah. So yeah, aggressively patient. What a great term. Great term. All right, Jason, when we come back from our break, you are going to play the newest game on the Multifamily podcast. Yes, it's called Oh Yeah? Well, how about this? Okay, so let's see if we can. This is a new segment, and let's see if we can make this happen. Okay, we'll be back right after these words. All right, then we cut it down. 3, 2, 1. All right, Jason, are you ready to sit on the multifamily hot seat and play? Oh yeah, well, what about this?
I'm ready. Let's do it.
Okay, and you will start off. Tell me one of the worst experiences you had in this business.
So we actually had a lift station go down, and I guess let's just say this. So we had prepared to change out a lift station about month 9, and went down on the property.
Like for like a handicap thing?
No, for sewer water and discharge, because the property sewer was lower than the street. It went out. And the backup system went down too, and we it took us 4 days down on water. We did it. Here's the thing: it was evident because the prior owner was so bad that it was malfunction on his side. But this had happened to tenants previously, and they just knew it was part of the process. But we made it such a seamless process for them. It was a headache for a couple of days. It becomes an insurance and becomes a lot of things. But the management company, they were awesome. The tenants were super happy. Everything. It was a horrible experience. We made the most of it, but it was one of those things where I just know that part of the talk is you always have to have reserves, and you have to be able to set up correctly, because things are going to happen when you have 100 people living in an apartment building. So that was a horrible experience, because you shut the water off for a day here and there, and now you got a whole building down, and you're trying to make this for everybody to win, where there's not a way for everybody to win, but you're just doing the best you can. Bad experience, but that's where you really can just figure out, okay, what can we make this to be the best part for everyone here? And going forward, how are we going to be better than we were today? And looking at that, the tenants were super grateful because they had this happen to them before, it just blows my mind. And for that, just to note how we took care of them, they were so happy and so thankful for everything we did.
Oh yeah, well, how about this? I had a property where walked into one particular unit, and of course because your property is in Kentucky, my mind is going to my Kentucky property, which I got tons of stories on that one. But in this particular case, it was a brown stain on the ceiling. Okay. And we're trying to figure out, what's that brown stain? It's like water seepage or something, but it's in a place where there should not be any water. It's just in the ceiling. So my maintenance guy goes up and he starts just poking it. Oh, no. Oh, yeah. The ceiling came down, and probably about 50 pounds of honey and bees everywhere.
Oh my gosh.
Oh yeah, we had to shut down that whole entire building just to fumigate it, to get all the bees out. It was a health scare, and nobody knew that building. I mean, that had been brewing for years.
Wow.
In that up the ceiling. Yeah. So now you're supposed to say, Jason, oh yeah, well, how about this? So, and I'll tell you something. I mean, I've been in this business quite a while. I'll always top you. I'll always find something worse.
Well, how about, oh yeah, well, how about this? So
okay, good. You get to hang in this game. Here we go.
On another property, we actually safe area, no gunshots in years. We had one of our tenants, basically got shot by a neighboring property that was owned by the city because they were letting in, ended up being drug activity in there. And it wasn't even people who actually lived in that building were there because it was a vacant unit. So we actually, for us, it was really scary because we had a building there that we were just trying to make them feel safe. We took one of our vacant units that backed up to the property, and I called the city because they were trying to our property management company was trying to call to no involved to get the city involved. So I basically just called and started leaving messages. Hey, this is Jason. I need you to call me back, and if you don't, someone's going to die on my property. And you get a lot of calls back if you start doing that. So I started. Now, next thing I know, I'm from there. I'm to the housing authority. Can't get on. They tell me I should talk to some lady. So I nobody answers. So I say, hi, please call me back. I'm worried if you don't call me back, someone's going to die. So that gets me a call back. Next thing I know, I'm on talk with their housing authority police. Same message. I just keep leaving messages that, you better call me back. Someone's going to die. Eventually I get to them. They get me into a detective. We get a detective that now starts doing a stakeout for a couple weeks in one of the units, and now goes in there and does a stakeout and basically arrests about 11 or 12 people out of the building that was right over there. So it was great to do that, but it was a crazy scenario because, I mean, the whole part here is to create a better community for people. And so when you find out that, you have tenants at risk, you're just like, whoa, you don't underwrite for things like that. You don't underwrite for your B scenario. It's just not like, oh, let me underwrite for these scenarios here.
Oh, yeah. Well, how about this? Because you just reminded me of another one. We had 19 cases of arson on our property in Kentucky. We called the police. We called the fire department. We said, hey, put somebody up in an apartment. Watch this area. The guy's lighting cars on fire. My occupancy dropped significantly while all this was going on. We were getting no help from the police.
Wow.
A few months after we sold the property, we found out that the police and the fire department, they were all in on it. They had released an arsonist into a halfway house 2 blocks down the street from my property, and they never told us.
Wow.
Yeah.
You got me. I got nothing.
Okay, I win the game.
I got nothing on top of that.
Oh, I like this game. I think it's going to be a very fun regular session here on my podcast.
Yeah,
that was cool. So, hey, Jason, okay, people can get a hold of you. It's the multifamilyfoundation.com. Is that how they can track you down?
That's correct. We're actually doing a one-day workshop too, October 12th. It's multifamilyfoundation workshop.com. And, if any of your listeners, it's here in New Jersey. So if you're in the tri-state area, want to come out, they put in Charles, we'll give them it's a $40 discount in there as well.
Awesome.
But for that, and they want to hear more about, just our company, YarusiHoldings.com. Is that ethnic word Yarusi, and the holdings.com takes us all right there. But in that, you can find everything about us and hear more about what we're doing and what we're trying to do, and see some of the stuff we put out there.
Awesome. All right. Hey, you've been a great guest. It's been a lot of fun. I really appreciate it.
Thank you.
And make sure everyone checks them out. If you're in the New Jersey area, make sure you go to one of those one days. It's always, if you're not moving yourself forward, this thing, you'll never do this business. So go anywhere. That's why, hey, I want people to go to your event. That'll be a blast, and they'll learn a lot, and they'll get to meet nice people. That's a nice thing about this business, Jason. And I was in the insurance business for years, most cutthroat, backstabbing business in the world. Multifamily, everybody it's just the nicest group of people everywhere I turn, always so nice. So, I
was just telling people that same thing. I said, if this is a great business, because if you don't know something and you want to ask a question, just go ask someone because they'll tell you the answer.
Yeah. And Jason, I don't mean you when I'm talking about the nice people.
That's it. Again, that's exactly what my wife says. Yep.
Yes. All right, sir. Good to see you. Nice to meet you, and we'll see you soon.
Thank you.
Thanks, Jason. Take care.